Hello and welcome to Pro Trader Strategies market commentary for Thursday, January the 23rd. My name's Eric Wilkinson and you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. Well, here in these market commentaries, I'm here to do about the same thing. Talk about the economic data, how it impacts the overall markets, but then go a little bit further and talk about my option strategies that I implement in and around those assumptions we come up with from the broader economic data. Anyway, without further ado, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, it's been a pretty crummy week, to be quite honest, for economic data and giving us some insight into the impact on the markets. But tomorrow is going to be a key day for that. I think we're going to get a lot of great economic, we're getting some robust, that's probably not the right word either. I don't want to lead one to believe that it is a positive economic data day, but we are getting some very important economic data out of Europe and a little bit here in the United States. So going to give us a little bit of a better picture as to the health of the global economies. All right, well, here in the United States, though, today we did get a couple of them, and we got unemployment claims coming in at 211,000, slightly lower than the expected 214,000. That's usually a sign of good, robust economy when we see unemployment claims lower. We also got consumer confidence coming in at a negative 8, expected to be a negative 8. Excuse me. I'm sorry about that. So that has been negative for, about the last several years anyway. That's not really something that we look at for, and that was European consumer confidence. That's not something that we really look at usually for a very important economic data point. The consumer usually is pretty bearish overseas anyway. All right, here in the United States, LEI, which is the leading economic indicator for the United States, it isn't one of the most widely looked at ones, but it came in at a negative 0.3, expected to be a negative 0.2. Usually we see that, or at least very recently in the last several years, we've seen that as positive. So seeing that start to wane a little bit is something to keep an eye on. Natural gas storage is coming in at a drawdown of 92 billion cubic feet, expected to be a drawdown of 88 billion cubic feet, slightly lower than expected, would be bullish for natural gas. Then we also got crude oil inventories. That was a drawdown of 0.4 million barrels, so just slightly less than 500,000 barrels. Expected to be a drawdown of 100,000. So more than expected there. Not really enough to really impact the overall markets dramatically anyway. But we can see crude oil really having a big slide, going right past the point of control yesterday and today, again seeing more weakness in the overall crude oil markets. But on that economic data point, we have seen a bit of buoyancy happening. As you can see, we're off of the lows, mostly due to the fact that we're seeing that crude oil drawdown, I think, is what's really giving a little bit of a lift to the crude oil markets here, at least off of the lows. And the market expected, in my eyes, to go back to that point of control. I don't think that we're going to go down necessarily and test that value area low. One of the weaknesses attributing to some of this sell-off in crude oil, we saw Chevron CEO coming out and saying we do not see $100 oil anytime in the near future. So we are way away from that, but just showing that he sees that there is a lot of supply out there, waning demand, that should actually cause crude oil to come off a little bit and just never really go up there to approach that $100 a barrel mark, at least in the foreseeable future, which in my eyes would, from a CEO of Chevron, would mean at least in the next year or two, to be honest. All right, gold futures starting to get a little bit of a bounce here, up about $6. Again, flight to safety happening here, but I think that we are right around that sweet spot, somewhere between 1533, at least above $1,500. I believe we are going to start seeing this market trade, somewhere between not quite 1600. That's above the value area. We saw the market test that. There was no price acceptance up there, really. We just zipped up there and ripped right back down. So that shows me that there is no demand up at those levels. But right here in and around this area we are now, between 1560 to 1500, is kind of where the market is probably going to remain, unless, of course, we see a massive sell-off in the equities. And we'll talk about that once we get there. But the pattern that has been setting up is kind of setting us up for a little bit of a correction. I'm not necessarily saying a 10% correction necessarily, but at least a little bit off of these highs, as we have seen almost a hockey stick type of action in the equities. Bonds moving higher up, testing the 160 handle. I've talked about this. We are in that sweet spot where the Fed has basically said that they aren't going to raise or lower interest rates. They're very happy with where interest rates are. We're probably going to see some more quantitative easing, especially if economic data continues to follow through with what we saw with the LEI, the leading economic indicator or index. That could cause bonds to start moving higher as interest rates start to go lower, and interest rates will be suppressed by that quantitative easing. That's really what it does. They leave interest rates really the same, but they press the interest rates down by doing this quantitative easing. That should lift the overall treasury market. Bonds are way down the road, but again, they are still going to be tied somewhat to that 30-day Fed funds, or the prime rate, which is what most retailers look at. All right, and prime rate's tied to the Fed funds. Anyway, right now bonds up 1 point on the day, or 32 ticks. Then we've got the VIX moving higher. Well, that all of these things that we've already seen, aside from crude oil, the gold and the bonds moving higher, would give us a little bit of an indication that the equities are selling off a little bit. Well, if the equities are selling off, we're going to see the VIX spike back into the teens, which is good. We want to see some VIX spike, especially during a high volatile time like earnings. Why? Because that is the best time to start selling premium, and I love selling premium in and around earnings seasons because we know we've got that volatility crush happening. Well, here we go with the Dow Jones Industrial Average. We talked about this topping pattern that we've seen. Well, we've seen it in the Dow Jones. Boeing been a big driver negatively to the Dow Jones, although today Dow Jones is down 160 points, and we're actually seeing Boeing up on the day. I think that we'll see that the Boeing trade will start losing a little bit of momentum as the rest of the broader market sell off here. All right. NASDAQ is making a comeback off of the lows that we saw pretty much overnight, down about 9 points on the day. But again, we've talked about this with this chart setup that we've got going on. It was looking like, I don't know why I keep clicking on that. It was looking like we were seeing a bit of a conundrum in the chart patterns. Yesterday, what we saw was we've got this green setup where these last 3 days here, where we were looking for today to give us confirmation. It's not right now. It's looking a little bit fuzzy. Some people could say that we are seeing like a 3-star pattern at the top, which is an indication of a top. But what we've seen here is kind of like a chart pattern like that. Then we've got this one. Well, without today happening, this does kind of look like somewhat of a continuation pattern, right? Well, with today's market action, let me get rid of those. With today's market action, we've kind of got something looking like this right now, right? Well, that is indicative of a bearish pattern setup. Anything, if this bar fills in like that as well, that would definitely be a sign of a bearish pattern. But right now, what we're seeing here is the pattern setup. If we look at that chart right there, it's kind of, like that. So that is usually indicative of a market top and a correction. Even if this turned into a, let's say, a green candle, and finished positive on the day, despite the fact that, even if it finished on the highs, but looked something like that, it would still be, to me, like a 3-star pattern where it is looking like we have lost the momentum to the upside. And with this kind of parabolic move, we would expect some kind of correction here. There's just been no profit taking whatsoever. And if we were to take some profits, we could easily see this level coming in right here, just below 8,800 in the NASDAQ. Yes, that is a big drop. We're talking 300 points. Not to say that that's going to happen overnight or in the next couple of days, but we would expect the market to want to come down and have a bit of a correction, and that would be a location I would be keen on to see it come down to if we start seeing this market roll over. E-mini S&Ps, we can see are off by about 14 points. Again, very similar chart setup where in this chart setup, we have pretty much the opposite colored candles where we've got a candle like this, maybe a little bit more of a wick on that, and then a hammer on top of it. That could indicate a positive move anytime you see those two back to back. But today we've got pretty much a confirmation pattern happening right there, which is very bearish. So market starting to move lower. Yes, right now we are above that 9-day simple moving average, which is a indication of short-term bullishness. But even with this chart setup, a settlement above that would lead a lot of people to believe that we are going to look to come back down and test an area somewhere right around here, maybe 3,200. Okay, so keep your eyes out for that. 3,200 actually is a little bit lower than my line, and it kind of lines up with that 50-day simple moving average. So we could go down there and retest that over the next couple of weeks. One big thing, we've got the economic data points tomorrow across the pond, like I said, with the flash PMIs. That is their most important forward-looking economic data point. So we're going to be looking at that. Here in the United States, we also get our own flash PMI, but that one is a little bit of a lagger in regards to our most robust economic data point, which is the ISM PMI. All right, so we're going to have to keep an eye on these going forward. To me, though, it's looking a little bit bearish. Here's the breakdown of the E-mini S&Ps on the 30-minute candles. Gray section is overnight. You can see the overnight low was created, or actually the low was created right on the open of the day. Sorry, and it looks like we're going down to retest that. So weakness in the overall equity markets, not looking so good. I'm going to be talking about a couple of things today where we are looking at covered calls. Now, we've talked about with DAL, which is Delta Airlines, a trade I put on as a bullish move. It's been a pretty good pairs trade with Boeing. As a matter of fact, right now we're seeing Delta Airlines in negative territory, and we're seeing Boeing in positive territory. So these two, interestingly enough, are very opposite in nature. One thing to note with Boeing is it looks like they're pushing back that 737 MAX reinstatement, if you will. So that's getting pushed off. That's going to hurt Boeing. A lot of people are saying it's really going to affect some of these airlines. I think that these airlines are really being affected by the coronavirus more than anything, where China is basically ready to cut off Christmas. It is their lunar New Year coming up. That is their biggest holiday. It's like canceling Christmas, and they are locking down some of these cities, stopping busing, not allowing people to travel. So there's a lot of messy things going on there. Very unprecedented what's going on this early in a flu virus type scenario in China. So they are being very diligent about that and canceling a lot of these parades and everything else that are going on in and around that. So with Delta, because we've had this correction since I put this trade on, I'm looking to start getting mechanical on this, lowering my cost basis. I'm going to be talking about how we set that up in today's webinar. I almost did it yesterday, and it is on the covered call strategy, but I wanted a great example for you guys to show you how we go through this thought process of when we start to look at doing covered call strategies, lowering the overall basis on something where we want to keep a hold of for the long term, but in the near term, we see that weakness and we want to take advantage of that. Maybe get another little dividend in between the dividend cycles and try to stay mechanical with that type of trade. I talked about how we did it in McDonald's, but not everybody gets to see that. So we're going to do a real live example in today's webinar. So go to protraderstrategies.com and sign up for that. We'll show you how to build this out in your portfolio for any underlying you have in your stock portfolio, all right? Or 401k for that matter. All right, so if you can't take that, take it easy.